The plunge protection team was on vacation today, it seems. Surprisingly, they allowed Amazon to enter a bear market, pulling several other companies along with it. The FANG stocks have fallen 19% or worse. Oddly, there has been no forward guidance from the Fed. There has been no vocal admission of the issues, and there doesn't seem to be any desire to engage in QE4 at this point. How low can it go? You came here for the truth, so let me unveil that for you. Today, I have an absolutely jam-packed episode. I have no idea how I'm going to get to all of this information. I have so many charts, it's going to make your head spin. I got some articles to cover. I have a lot of data, so let's begin right away. You probably watched the video I did during the day. This is Friday's trading session, and it was a mess, and it got worse. So let's get into the details right now. This is out of CNBC. Dow dives nearly 300 points. S&P 500 dips into correction levels in another wild day on Wall Street. So this is what happened. I want to show you some of the charts that are involved in this. Take a look. Microsoft overtakes Amazon as the second most valuable US company. Of course, this has been going up and down. There's no doubt about that. They are still both massive corporations, but Amazon in particular took a huge hit. So this is the chart, and you can see that once it hit that $1 trillion market cap, it was never able to surpass that. It's as if that was the moment where everyone decided to sell. Of course, it coincides with what's been happening in October and so on, but surely it is quite apparent to me what happened here. It looks like a lot of those algorithms were trading based on that. A lot of traders were simply feeling that this was the moment that it had a huge run up. Now would be the time to sell. But look at what has happened. I mean, it has been taking a beating. I want to note the fact that where it is at today is significantly higher than where it was several years ago. It has moved up, but we should not discount the level of beatdown that it has experienced in October. Amazon CEO Jeff Bezos' wallet is looking a little lighter. And they actually show you right here, it's down as much as $14 billion. That's a heavy hit, even for Jeff Bezos, because a lot of his wealth is held inside of Amazon shares. He has investments in a lot of other companies. However, this right here just shows us $14 billion. That's just massive. So I just wanted to show you that. And then you look at the FANG stocks. I mean, in a single day, the FANG stocks have been repeatedly beaten down. You could see what has occurred here, but all throughout October, I mean, pretty much right on the dot, you could see FANG stocks have been declining. Yeah, there's been some ups and downs along the way, surely, but at this point, the level at which they are at, I think it was Alphabet was the only one that was actually 19% down from their peak, and the rest of the FANG stocks are down over 20%. They're all in a bear market, and if you would allow me, that 19%, it's basically 20%, so we can say the FANG stocks are in a bear market. All of them. I mean, it's unbelievable. Just a few months ago, this was the trade. This is what everybody wanted to get on. Only just a start. S&P 500 negative for the year. Worst month since 2009. That's really wanted to highlight for you as well. NASDAQ had the worst day since 2011. The Dow is below the 200-day moving average for the first time since March 2016, ending the longest streak ever. All of these pieces of data are so important for all of their different reasons. You could see on the left-hand side all the numbers, but these fluctuate. Okay, if you're watching this video a week after I record it, these numbers aren't significant, but the information on the right-hand side, that is significant. All right, let's move on. So much to cover. All of the moving averages have been destroyed right now. Top left corner, if you can't see that, that's the Dow Jones. Then we look at the S&P, the Nasdaq, and the Russell. Each one of them have fallen significantly below all of their moving averages. And even the 200-day, which is something that all these traders are always looking at, the global systemically important banks are down now 30%. We're going back into levels from 2016. Down 30%, not 20% like the FANG stocks, 30% from their peak. I mean, this right here is truly worrisome. A 30% decline is nothing to, brush off. Nothing to think to ourselves, you know what, it's not a big deal. It can come back, no problem. Well, surely it can, but not in a quantitative tightening scenario. I've got something to mention in a moment. I just wanted to show you this as well. More of the FANG stock charts. MSCI, let me highlight this. MSCI USA. And then that's the green line. And the red line is the world excluding the US. Now, clearly, there had been this moment in time, beginning of May essentially, where US stocks just defied gravity. They were increasing so much, and that was different from the rest of the world. However, things have really changed. You could see that the US stocks have come down quite a bit here throughout October, but you look at the rest of the world, so have they. And even though the problems of the Federal Reserve increasing, of China, US, you still seem to have an issue in other markets around the world that may be totally, you would think, irrelevant to what's happening right now. But that's not the way it works. All markets rely on the US to do well. Now, they might not do well on their own, but if the US isn't doing well, suddenly these other markets don't do well either. It's a real strange scenario, but that's been happening in particular ever since the financial crisis. Home builders are down as well. This is not a good sign because of everything we've been seeing with real estate. Of course, that all stems from the Federal Reserve increasing interest rates. That puts a heavier burden on the commercial banks, investment companies, everybody trading along with that. The mortgage brokers are feeling it. The realtors are feeling it. There's a few hot markets left, but a lot of people are being priced out and they're moving to other places. And that's creating somewhat of a boom in some other environments. There's no doubt about that, but that can't last forever. And this is ultimately the most important chart you can ever look at. And by the way, why aren't other people talking about this? They mention it briefly. You'll never see it in the mainstream, but I highlighted every single chance I get because I think this is the number one. Interest rates and the global central bank balance sheet. Come on. We have to get smart with this. We have to look at what the central banks are doing, and it just so happens to correlate very accurately with stock prices. World capital markets market cap, that's the black line. And you'll see here throughout October, it seems to move away definitely from the rest of the, looking at the central bank balance sheets. Well, we did see this occur before on the up and the down in January. So it doesn't necessarily need to correlate 100%, but it eventually finds a balance. And we have one of two options at this point. The central bank balance sheet could be reduced significantly, which apparently the ECB said they're going to stop printing in 2 months from now. We'll see about that. Or world stocks will start to recover from this dramatic fall. And that wouldn't surprise me, actually, because it is truly oversold at this point. I don't think it's necessarily going to fall by 50%, but hey, it's possible. I just think that we need to see more of a big issue. I think it could turn around at this point. What happens a year from now, I don't know. I'm just saying right now the markets might think that they are oversold. Now's the time to buy. Central bank balance sheet expansion. There we go. We could see it whether we're looking at the Fed, the ECB, the BOJ, the BOE, PBOC, and the SNB. All the big boys, and they're all declining. Now, the Federal Reserve is doing the weakest quantitative tightening out of all of them. It's truly embarrassing. But, of course, the whole world really is relying on the Fed. So, we can see what they're trying to do. They're trying to do it as slow as possible. But anyway, here we go. You could see that quantitatively we're moving down. I mean, it looks like to me that they've moved down about $1 trillion from the peak. So that should be beginning to be a warning sign. They did say initially, I remember reading that back in 2017, that in 2018 they were going to taper 1 trillion. Now, whether or not they will, have to increase their central bank balance sheets at some point, I don't know. Okay, I don't know what's going to happen, but the year's almost over. We're at this point of the recording, we're at near the end of October, and you got a couple months left. So it looks like they might actually go ahead with that 1 trillion. We still got a lot left, that's for sure. 20 trillion to go. They're not going to be able to do it. Relative spreads, the Euro IG senior corp bonds, eligible and ineligible for the ECB's CSPP purchases. It looks like they're tapering. Based on that, whether we're looking at the asset purchase program from the ECB, the corporate purchase program, it doesn't really matter to me. All I know is that they're printing less money and the market is pricing that in. That's basically all this is trying to show you. And then a couple more very quickly. Deutsche Bank fell even further. I mean, can it get worse? What's going to happen? Now they're putting the Lehman Brothers over top of this, and that's not really a fair assessment, but they're trying to just show that this could be that pivotal moment, that linchpin, however you want to call it, a tipping point, some people say. But when I look at this, I just think to myself, really, how far down does it go before they step in? All right. The proportion of relevant markets owned by central banks. And I just wanted to show it to you. You can pause the video if you want to see it, but you can look at the US, Eurozone, Japan, and the UK and what they own. And clearly it stands out on the left-hand side. That lighter kind of blue line there is Japan. They own nearly half of their government garbage. Half of it. But it just shows us how much they've purchased. I mean, the U.S. purchased here, looks like, of the asset-backed securities, mortgage-backed security garbage, that they've got 20% of that percentage held by the central bank. 20%. Imagine if they sold it all in one shot. The market would collapse instantly. And I just wanted to finish off with this right out of Bloomberg. There's a quote here. "We're done on the bull market. We're done on the economic cycle. We're not in free fall, but the best days are behind us. It's winter." So, Mr. Kitt, it's a good statement. We'll see if you're accurate. I don't know what's going to happen, but it's not looking pretty, and I'm just here to document it as it happens. If you found the video informative, please give me a thumbs up. When you give me a thumbs up, you're supporting this channel. If you're wondering, how can I support this guy? Just give me a thumbs up. Hit that button. If you subscribe to the channel, that supports me as well. If you put a comment on the video, that supports me as well. If you don't know what to comment, put whatever is relevant. Put the word stocks, put the word markets. It doesn't matter, but if you put relevant words, then it helps the search engines to find this video, and that will help me as well. So anything related to that, not just on this video, but on all future videos, I would really appreciate that too. And if you want the financial education you were not taught in school, well then, these 2 books have it all. You can actually take a look through the books. Just go over to Amazon. There's a link in the description. And you'll find out that these 2 books, I get into everything. I mean, the foundation, how to make money, everything you need to know to get you from A to Z. So definitely check the link in the description. If you're more interested in the audiobook version, you can get that at themoneygps.com.